the SEC versus Grayscale in an epic battle, I think, of chess that is trying to figure out which one can blink first. And we're going to play all this for you, kind of break it down for you, give you some insights of how does this play out for Grayscale in their ETF application. My name is Paul Barron. Welcome back into TechPath. A couple of things I want to get into before we get started. One, of course, is our sponsor, and that is iTrust Capital. If you guys are looking at long-term holding of Bitcoin, Ethereum, any of that you want to put into a crypto IRA, iTrust is the place to do it. You can do a lot there in terms of all sorts of assets. You can kind of see that scroller coming across right there of iTrust, what's available. Cool aspect of what they offer is no fees monthly. You only pay fees when you do a trade within your IRA. So pretty simple and pretty easy. Make sure and start consulting your tax advisors. Check it out, see if it's right for you. Use our link down below if you want, and you can hit a $100 funding reward if you apply. So great deal. Let's go over to a couple of tweets here. I want to start with one from James Seifert in reference to the Grayscale situation right now, because remember, Grayscale wins in the court battle. The SEC did not appeal. So everybody's thinking, okay, well, this should be a slam dunk, right? Well, maybe not so fast. Here is Seifert coming in. He says, update, Grayscale has filed an S3 for GBTC. This is basically registering the fund as a 1933 Act product, as far as he's aware. And it's different from other prospectuses we've seen on updates because the GBTC has already been an SEC reporting company since 2020. So what does this mean? The issue is that they won, meaning GBTC won against the SEC. SEC says, okay, yeah, you're right. All right, fine, well, you win that. But maybe there's something else here that we don't necessarily have to approve it, and here's why. And we'll get explain further about this because there's a couple of analysis here. This was Scott Johnson kind of talking about it. And this is also, we did this clip yesterday on another video, and Gensler is a bit cagey in reference to GBTC because what they're talking about behind the scenes about whether Gensler needs to refile its application. So when they look at this, meaning the SEC, they could be just saying, okay, if you come back and refile, it almost puts them back into the combination with all these other companies. Definitely not going to be the first one if they have to go in and refile. So that's another factor that would play into this. But there's some strategies that, Grayscale could take. The question would be whether or not they do it. One of them comes over, which I think is interesting. Nate Garassi says, hypothetical for play for Grayscale, just go ahead and uplist GBTC to the stock exchange now, make SEC force a delisting, and then ask for forgiveness, or just a point for a court victory. And then obviously they need the the New York Stock Exchange market makers to go along. That's going to be the tricky part, but there's not really a big risk at this point. So that'd be an interesting play. But right now it is in limbo right now, being GBTC as an ETF and the SEC not necessarily pushing back on the court decision, but not necessarily approving that either. So there's a lot happening around this issue right now. Another thing that plays into this is this recent submission of all these additional filings of the existing ETFs, including BlackRock jumping into the space. So here was another tweet by James. BlackRock filed an updated Bitcoin ETF prospectus early this morning, which is likely a response to the SEC comments that we've seen from ARK, Fidelity, and others. We talked about these earlier in the week on a variety of these new updates. So again, remember, a couple of points that everybody's getting at is that there's conversations going on with the SEC right now, a lot more communicative, and that means, I think, that means good things for this going forward. If you look at what JPMorgan is saying about this, JPMorgan expects spot Bitcoin ETF approvals to come within months. So remember, there's a couple of dates here. Let me highlight those down in the article. Most likely before Jan 10. That's the final deadline of the ARK. Remember, ARK, 21 shares, that was the application that technically matures first. And that's the Jan 10th date. You look at that along with, given that spot Bitcoin ETF for GBTC now appears more likely, Grayscale will face pressure to lower the product fees, which would be another factor in this going forward. SEC wouldn't likely grant any spot ETF applicant a first mover advantage and approve multiple ETFs simultaneously. This is something we've seen, and pretty much every analyst we've had on the show has said that. And then this would allow for more competition in terms of fees, which is good. Crypto enthusiasts eagerly, of course, are awaiting this. Such approval is unlikely to be a game changer for the crypto markets because the spot ETFs have been existing in Canada and Europe. It's different. Canada and Europe are different than the United States in terms of what I think will be action. Now, will we see massive uptake? I think it all boils into institutional capital and the pressure that Larry Fink and others are getting from their investors in their assets under management, and whether or not they're ready to put in a full percent into, remember, these guys are holding trillions and trillions of dollars in assets under management, so it's a big deal. There is a couple of people out there estimating a potential rise for Bitcoin between around 42 and 56K right now if Blackrock ETF is approved. And I think it's just a matter of time. So I'd love to get your input. First of all, drop some comments down below. Smash the like button if you guys like these ETF videos, if it's a breakdown, want to really understand how this, or are you ready? Are you ready for this run on Bitcoin over the next year? Because remember, the halving is coming, and there's ways to play this a little differently. I'll play a clip here in a second for you around that, but I'd love to get your feedback, how you're playing it. Drop some comments and smash a like, because it's going to help others get into the space and really understand what's going on. Here's another article: crypto regulation. Is the SEC acting for investors or for Wall Street? You know, most of the time in the history, they're more in line with Wall Street. I mean, that's just kind of the way it works in big business. A couple of points they make. Gensler's actions aren't surprising, considering he made millions on Wall Street for playing politics. And then recent tensions between the SEC and crypto ecosystem obviously heightened in the gaps of regulatory actions. That's another situation we should probably talk about in another video. These gaps have gone unnoticed for a long time. And then a crypto advocate asserted that regulatory capture at the SEC is why a large collapse like the one at FTX could have happened, which is another problem we've often mentioned here. And then he noted that the attitude of political elites toward the SEC may be changing given the recent back and forth between them. And this is the other thing that we've seen in the section of the lawmakers. And the lawmakers have, to a certain extent, pushed hard against it, even though I'm starting to think there's something up in DC, because we're starting to see a little bit of the faction within DC not necessarily driving through the potential of getting these crypto bills through because of other political issues. So that is clear now. There's a lot more at stake in DC out there. So again, this goes back to Gensler playing favorites. So definitely a big one. Let me go to this clip right here from Mike McGlone, who talks a little bit about the halving event. Listen in.
It's complete consensus. Things that we most anticipate generally don't happen. And to speak about it this much beforehand that's not an issue that really affects market. Whole history of cryptos have been in the back of zero interest rates, and now they're not. They're very high, particularly in the US, particularly versus inflation. The Fed's got to start cutting rates and add liquidity, and that's what I started with. Liquidity right now is negative. So typically for that liquidity to be turned back on, risk assets have to go down. Maybe we won't have a US recession. Maybe the Fed can start cutting rates and risk assets can just go right up. But that would be unlikely. By the time we get to April next year, which is when the halving is supposed to be, I'm fearful that most cryptos will be lower prices along with most risk assets like the stock.
All right, so you heard it right there. You know, kind of, he hits on a couple of points that we've talked about here on the channel quite a bit, and that is that, and I agree, I don't think the halving is going to be as big as everybody is pointing to. It's something I've been on record for talking about, and he is right. Crypto is now getting ready to go big time because it's experiencing its first cycle with now positive interest rates I mean, mortgage just jumped to 8%. Then you've got Jerome Powell coming in recently, just on stage matter of fact, this morning, talking about higher for longer, and they're definitely holding into that 2%. You got 2% holding. You've got bonds in a situation right now where banks are really going to be in a position of having to pay a lot more in terms of losses and unrealized losses, which is going to cause interest rates and cost of goods in the essence of instruments around finance that these regional banks are going to continue to have problems with. So all of this plays into what's happening here with the ETF. The reason is because the ETF doesn't get the pump in the market that everybody's expecting with all these other influences. That's the thing I've said often. Macro influence is still here. It's not going away until we truly do see a shift in the economy. And that has not happened, guys. That has not happened. I know a lot of people out there will say, Paul, give me some bullish news. I'm still in the moderate to bearish on where we are right now. And there's several signals that are kind of pointing to that. Here's, of course, Dr. Jeff Dross, Vailshire Capital. We've had Jeff on several times. We'll probably try to get him on for the end of the year. Event Horizon, my timeline. This is a good one. Remove U.S. debt ceiling, check, check. Massive debt, check. A couple others on the absorb as much debt as the issuance as they can on the T-bills, check. ORR is depleted sometime in 2024. That's an interesting one. Treasury market shows increased stability, very high. Rising move index. Treasury slow issuance. Could happen. Fed implements a mandatory increased bank reserve. That's actually already happening, even with like Citibank on the scenario where they're doing this. And Citibank pushing back so hard. And that tells you a lot because they're not necessarily ready for that. And just remember, commercial-backed mortgages, big deal. Commercial-backed mortgages, big deal. On all this, U.S. Treasury debt issuance speeds up, severe bond market instability. That's when we'll start to see some really interesting things play out. And then you've got financial institutions starting to fail in real situations. And of course, this would cause those things around contagion, which is bank runs, et cetera. Those are the things that could potentially be ahead of us. Risk assets will crumble, extreme volatility. That's what we're talking about, guys. Crypto, those are risk assets. And then we're dealing with Fed liquidity patches. This is where we might see hardly no effect. I don't know that I would agree with that. I think you would see a little bit of effect in the market just because they'd be in such pain at that time. And then the Fed declares a massive QE, quantitative easing, and then they start, printing. That's how it happens. All this, what Jeff is saying is bottom risk assets, Bitcoin soars to new highs late 2024. So get ready right now, guys. We could be seeing the true depth of winter, as they say. Winter is coming. We'll see how all this plays out. All right, guys, if you're not in the Diamond Circle, make sure and get in right now. It's one of the best places to get additional content, more podcasts, more TA videos, all that available to you. And it's a really special time because right now is the time you need to be preparing for all this stuff. You need to understand what's happening in these markets because this is when millionaires are made, when everybody else is running for the door, when everybody else has got, oh my God, the sky's falling. That's the time when you can start positioning your business and your own strategies around growing to the next level. That's what I do. All right, if you got, as I said, not in the Diamond Circle, click the link down below. Catch me out there. You guys can follow me on Instagram. It's just @PaulBaron on Instagram. That's right, @PaulBaron. I'm going to do some stuff over there for you. So come check me out over there. If you want to, of course, catch me on Twitter, it's just @PaulBaron. We'll catch you next time right here on TechBath.